The most powerful central banker on earth just changed. And almost nobody is talking about what it means for your money. On May 13th, 2026, Kevin Warsh was confirmed as the 19th chair of the Federal Reserve. The vote was 54 to 45, the narrowest confirmation in Fed history. He owns over 30 crypto investments. He said, quote, "Bitcoin does not trouble me. I think of it as an important asset that can help inform policymakers." This is his story and why it matters for every dollar and every Bitcoin you own. Over the next 10 minutes, I am going to break down who Kevin Warsh really is, what he plans to change at the Fed, how markets have already responded, and the risks that nobody is talking about. So who is Kevin Warsh? He was born in 1970 in Albany, New York. He earned his undergraduate degree from Stanford University and then went on to Harvard Law School for his JD. After law school, he went straight to Wall Street. He spent 7 years at Morgan Stanley working in mergers and acquisitions. This was not a government career path. This was high finance. Billion-dollar deals, corporate restructurings, the sharp end of Wall Street. In 2002, he made the jump to Washington. He joined the White House as an economic policy advisor under President George W. Bush. For 4 years, he worked on economic policy at the highest level of government. Then in 2006, President Bush appointed him to the Federal Reserve Board of Governors. He was 36 years old, the youngest Fed governor in modern history. Think about that for a moment. At an age when most people are still climbing the ladder, Warsh was sitting on the board of the most powerful central bank in the world. His personal life is just as notable. He married Jane Lauder, the granddaughter of Estee Lauder, the cosmetics empire founder. Financial disclosures put his net worth between $131 million and $209 million. This is not a career bureaucrat. This is a Wall Street dealmaker with deep personal wealth, family connections to one of America's most iconic business dynasties, and direct experience inside both the financial system and the federal government. Warsh was inside the Fed when the 2008 financial crisis hit. He worked alongside Ben Bernanke during the most chaotic period in modern financial history. Lehman Brothers collapsed. AIG needed a government bailout. The entire global banking system was on the edge of failure. Warsh had a front-row seat to all of it. But here is the thing that most people miss about his time at the Federal. He disagreed with the response. Warsh was skeptical of quantitative easing. He was skeptical of the bond-buying programs that followed. He believed the Fed was doing too much, not too little. While the rest of the board was voting for more intervention, Warsh was pushing back. In 2011, he left the Federal Reserve over those philosophical differences. He did not get fired. He walked away on principle. After leaving, he joined Stanley Druckenmiller's family office as a partner. Druckenmiller is widely considered one of the greatest macro investors alive. This was not a consolation prize. This was a validation of Warsh's worldview. He also became a fellow at Stanford's Hoover Institution, one of the most respected economic policy think tanks in the world. For 15 years, he watched the Fed from the outside. He watched quantitative easing expand. He watched the balance sheet explode. He watched the Fed take on climate mandates and DI initiatives. Now he is back, and he is in charge. During his Senate confirmation hearing, Warsh was asked directly about Bitcoin. His answer shocked the room. He said, quote, "Bitcoin does not trouble me. I think of it as an important asset that can help inform policymakers," end quote. Let me repeat that. The new chair of the Federal Reserve, the person who controls the money supply of the world's reserve currency, just called Bitcoin an important asset. This is not the language of a crypto skeptic. Compare this to Jerome Powell, who spent years calling crypto speculative and warning about stablecoin risks. Warsh is not just tolerant of crypto. He views it as useful information. His financial disclosures tell an even bigger story. Warsh holds 34 crypto-related investments through an entity called DCM Investments 10 LLC 34. This is not a man who bought a little Bitcoin to seem cool. This is a deep, deliberate allocation to digital assets. On X, formerly Twitter, people called him, quote, more Deegan than you, end quote. He views cryptocurrency as an informational signal about monetary policy, not a threat to control. That is a fundamental philosophical shift from his predecessor. When the person running the Fed sees crypto as a signal rather than a problem, the entire regulatory environment shifts with it. So what actually changes now that Warsh is chair? There are three major pillars of the Warsh doctrine. First, communication style. Warsh has said he wants the Fed to, quote, skip opportunities to share its musings, end quote. That means fewer press conferences, fewer speeches, and less forward guidance. Under Powell, the Fed talked constantly. Every speech moved markets. Every hint of a rate change sent traders scrambling. Warsh wants to end that. He believes the Fed should act, not narrate. Markets will need to learn to read the Fed differently. Less hand-holding, more watching what they actually do. Second, the balance sheet. Warsh wants a Treasury-only balance sheet. No more mortgage-backed securities. Shrink it and simplify it. This is a direct reversal of the post-2008 approach. For over a decade, the Fed has held trillions in mortgage-backed securities. Warsh wants to unwind that completely. Third, the mandate. No more climate mandates in monetary policy. No more DEI initiatives at the federal, pure focus on price stability and employment. Nothing else. He has called this a, quote, regime change, end quote, on inflation targeting. This is not tweaking around the edges. This is a fundamentally different Fed. His confirmation vote tells the whole story. 54 to 45, the narrowest margin for a Fed chair in history. Only one Democrat voted yes. Senator John Fetterman of Pennsylvania. Every other Democrat voted no. This is a deeply political appointment, and the policy direction will match. Warsh is not here to maintain the status quo. He is here to rebuild the Federal Reserve from the ground up. Markets have already responded to the Warsh confirmation. On the day he was confirmed, the S&P 500 broke above 7,500 for the first time in history. All-time high. On a Fed chair confirmation, Bitcoin recovered above $80,000. The crypto market read the Warsh appointment as a structural positive. And it is not just the headline numbers. Look at the structural shift that most analysts are missing. With Warsh as chair, there is now a dovish coalition forming on the Fed board. The dovish coalition is Kevin Warsh as chair, plus Michelle Bowman, plus Christopher Waller, plus Stephen Moran at the Council of Economic Advisors. That is 4 of 7 governors who lean market-friendly. This is not just one person. This is a voting bloc. The first FOMC meeting under Warsh is June 17th and 18th, 2026. Every trader, every investor, every crypto holder should have that date circled. Rate cut potential by end of year is now on the table. The market is pricing in a fundamentally different Federal Reserve. But every bull case has a bear case. And this one has several. First, political pressure. President Trump has publicly pushed for interest rates as low as 1%. If Warsh caves to that pressure, inflation could reignite. The whole point of Fed independence is that the chair can say no to the president. If Warsh cannot do that, the credibility of the institution erodes. Second, geopolitics. The Iran conflict remains a wild card. Any escalation could spike energy prices and reignite inflation overnight. Warsh cannot control that. Nobody can. Third, a divided federal 54 to 45 is not a mandate. It is a razor-thin margin. If the economy weakens, dissenters on the board could block action. Fourth, the balance sheet shrink itself. Moving to Treasury only could spook bond markets during the transition. There is no precedent for this kind of unwinding at this scale. And fifth, Warsh has never been tested as a crisis leader in this role. He was a governor during 2008, not the chair. The chair makes the final call. That is a different weight entirely. I publish a free daily crypto and global equities intelligence brief every morning. If you want this level of signal and analysis delivered to you daily, the link is in the description below. Premium research is available on the Gumroad store, also linked below. Subscribe for weekly deep dives on macro, crypto, and the intersection of AI and finance. If this video helped you understand the Warsh appointment, hit the like button and share it with someone who needs to see this. Remember, this is educational content only, not financial advice. Do your own research before making any investment decisions. Thanks for watching. I will see you in the next one.